Hello everyone, welcome to our webinar series of TradeClue. So today we'll extend the last time's topic, which is called as triangle breakout, and today we have named it as clean breakout plus gap down bullish structure. Certain times when market opens huge gap down, which happened yesterday, and that's why we have picked up this topic for the webinar. And it is very fruitful to understand whenever there are gap down, big gap down, can the bullish structure be understood, and how can we react by buying whenever there is a big panic situation and markets opening gap down? That's where we'll focus on clean breakout. So as you already know, we have our YouTube channel, so you can go and subscribe, and all the intraday setups are over here, where we cover wide variety of setups. Whichever seems to be suitable, you can apply those in the markets. So today we'll be extending the last webinar which we had done on triangle breakout. So this one is called as clean breakout. Now what do we mean by clean breakout? The first point to understand in this case, the first candle, let's say 15-minute intraday candle, if you're trying to focus, is a strong candle of green color. So when you have a strong candle of green color, that shows the first sign of bullishness. The first point is showing strong strength by showing good green candle. So 15-minute of bullishness whenever markets open down, and you can clearly see if there is a strong 15-minute bullishness that will sustain going forward. And if this 15-minute of bullishness is taken out, if this is being taken out, then you will have a downside spiral coming through. So follow downside can come through, but provided over here, whenever you have a clean green candle, that is where we need to first understand it is on the bullish side. So let's put this over here. Now after the green candle, we can have variety of structures. One kind of structures is something like this, where the price undergoes consolidation up and down. So it becomes like a flag type of structures where the price keeps moving up and down in this format. Other form of structure which is more vividly seen, forming kind of a triangle structure. So this is again kind of symmetrical triangle structure, which we did it last webinar. The description has the link, so you can use that to watch the previous webinar as well. And the third, which is much more interesting, can have a triangle setup, but a very good triangle showing some more sign of bullishness. So somewhat kind of ascending triangle. So all these, when you have A, B, and C structure, they all seem to be like a flag structure. Out of all these, we need to understand where we can initiate our entries. So that is the key. Out of A, B, and C. So if I now name them, which it becomes easy for our reference, let's say this is A, let's say this is B, and let's say this is C. So when you have A, B, and C, agenda is how to trade them. First thing which is common between A, B, and C, if we see over here, where we can clearly note down that each of these, all the consolidation patch at the top, each of these are above 50% of the green candle. So the first rule, above 50% of the green candle. So whenever you have anything sustaining above 50% of the green candle, that is the key. That shows bullishness is in check. Okay, so the agenda here is whenever the prices are going down, the buyers are coming in and trying to push the price on the higher side. So one thing is very clear, that in each of them, the bullish signs are there. So each of them, how do you know bullish signs are there? Because it has sustained above 50% of the green candle. Second, the open over here in each of these candles, the most important part is also the open. This open is equal to low of the day. That means the moment it has opened, it has started going up. That means continuous buyer is there right from the start. Go 9:15 market opens, buying comes. So this is also showing you strength, plus sustaining above 50% is a second check of strength. And now third, what structure should be focused for our clean entry? So here we have three formats over here. Last time we did the triangle, symmetrical triangle breakout, and we were very clear that if you want to trade in symmetrical triangle breakout, we will wait for the high to be taken out. So whatever is this high, let the price go up, sustain, and once it is taken out, then you can make a trade. So the high has to be removed for the symmetrical triangle. So this we did last time. Now let us check what about A and C. Now in A and C, the agenda here is the price might go range bound. This is all up and down. And then finally, it tries to zoom on the upside. So it's showing equal strength. The sellers are selling over here, the buyers are buying over here, trying to push it high, and one fine day, or you can say one fine time, maybe after 2 hours, 1 hour, 3 hours, it tries to push on the upside. The third, which is much more interesting and much more controlled, where the selling comes, the buyer pushes it higher. Selling comes, the buyer comes early. Selling comes, the buyer comes fast, and then the price goes on the upside. So out of A, B, and C, the most clear format to trade is C, because here open equal to low, strong green candle of 15 minutes, then we have sustaining above 50% for at least next 3-5 candles over here, or maybe an hour or so, and then we are seeing continuously every sell is been removed and the buying is taking it higher. So this is kind of making higher lows because the buyers comes in at every point and tries to push the price on the upside. No doubt the ascending triangle will show you more strength than the consolidation patch or the symmetrical triangle. So idea here is to apply these technique in the yesterday's market. Can we find a good entry point or not? So let's go out and check what is called as clean breakout. So these are all breakout points over here in A, B, and C. We need to see which one can help us for clean breakout. One more pointer before we go to yesterday's market. The most important pointer to also note down is yesterday's close. So whenever we start, we have to first see where is yesterday's close, because this has opened gap down. So yesterday close will act like a barrier for its up move. So first thing is yesterday's close. So let's go out and check. In this case, I am bringing it to yesterday's day. So let me first bring the level. So this is TradeClue software. You can take your demo login. Description has that. I'm going to my yesterday's day so that I get the levels as well. So here was Bank Nifty, let's say on 15-minute chart. First thing that I can see, huge gap down. When markets are opening gap down, it is at the DATR range. So your daily ATR is already been done. And plus you have a strong green candle. So start from the word go, you are seeing buyers coming in, strong green candle, and we can clearly see what's happening over here. It's going sideways. Then again it tries to push high, comes back, zooms all the way to the top. Now this is inching towards yesterday's close area. And as I said, till yesterday close is not conquered, the problems are there. So it goes up, again selling comes by. And then we can see it doesn't go below the strong green candle. And then again starts coming up, again red candle, again green, and then starts inching higher. Now, why do we see two spikes at the same point? The only reason here is yesterday's close. So I'm trying to tell you, not only these structures plus yesterday's close plays an important role. So that's very, very important to understand. Yesterday close. Okay, and that's why we can see selling came over here. Again, one attempt, two attempt, and finally he tried to reach on the higher side. Okay, so the agenda is very clear. Strong green candle going sideways, trying to go up. But here we need to understand how to get in to these kind of trades. Okay, so let's go out and see some stocks which have also shown the same structure, and these are all Nifty 50 heavyweight stocks. But since Nifty has also gone through the same format, let me also load Nifty. Since Bank Nifty has shown the same structure, would be similar for Nifty as well. So here we can see strong buy zone above DATR, sustaining, trying to go higher, couldn't go above DS. This yesterday closed way far for Nifty, but again takes a U-turn, doesn't go below the green candle, and then starts riding higher. But here we can see a continuous hammering coming around this yesterday's close. So yesterday close is very, very important. region for any stock or index if you're trying to track. Now let's see first Reliance. Reliance shows huge gap down bullish straight from his max put OI region, and the max pain also crashing around this 1500 range. So very good pointer. Plus you have the green candle coming through 50% sustenance trying to go higher. Now we are very clear it is entering into its yesterday's close zone. So people who try to buy this breakout, they try to get stuck. So before we buy, we should know he will come back. So rather than buying over here, trying to chase, wait for him to come back. Do not be in hurry. Now it goes high, again it comes back all the way down, doesn't go below the last U-turn, or you can say the last consolidation patch which was there. And from here, after series of 5 red candles, 4 red candles, 1 red green, second green, third time also, if you see what has happened, spike on the downside, and then the progress starts. So one thing is clear, this yesterday close is a huge barrier. And always do not try to rush in. He will come back for you. And when he comes back for you, then you can enter with a minimum stop loss. When you know clearly it is above DS, above WS, both the weekly support, daily support, it has undergone some bit of correction from the yesterday's close region, then you want to buy, it's completely fine because your stop loss gets defined. But Reliance over here, we can say a lot of up down structures are there trying to go up, again coming back down, and then starts pushing it higher. So let's see what's happening in Infosys. Now when I see Infosys over here, sharp move on the downside, goes up, not a very good green candle. So first of all, the rejection comes because there is no good green candle. Our structure says strong green candle, which was seen in Reliance but not in Infosys. Second, has this other structure when we see of Reliance and Infosys, it comes back down, tries to go up, comes back down, tries to go up, again to the same point he's been rejected. And then we have the price trying to push higher. He has not even reached yesterday's close. So Reliance has at least, if you see from here, it has reached fast to yesterday's close. So those stocks which reach fast to yesterday's close, that means the gap down has not happened much. And then when it comes back up, they have little path to travel to shoot on the upside. So Infosys was a dampener, not even reaching to yesterday's close. Let's go to Maruti. Was that the case in Maruti too? No. Strong green, follow on green. This is yesterday's close. So whenever we see this is your yesterday's close range, which is there in this area, it again comes back down, tries to go up for the first time. As I said, first time, try to avoid. He will come back for you. He comes back all the way down. And it's very interesting. Now his supports are taken at DS, daily support. He comes back down, consolidation patch, strong green candle over here. And then he tries to now make a U-turn. When it tries to make a U-turn, we know that when you're trying to buy in this zone, your stop loss is over here. He will get some kind of hammering around this area again, but once it is crossed, he will not stop. Okay, so that's the key over here, which we can clearly see in the case of Maruti, in the case of Reliance, where you have these structures and then you go consolidation. The first attempt, do not enter, he will come back. In the second time, when you have red candles being taken out, then you buy, keeping the stop loss. Same if you see in Reliance, the second attempt had red candles. The second attempt had red candles. And then a strong green candle taking out 2 of them. You're trying to buy above weekly, daily support and keeping a stop loss. So this is the importance of TradeClue. At least you know the important levels of sustenance. We know that this will be now the second attempt and he will fly. Going out for Grasim. Let's see what is happening in Grasim, which was very interesting. Yesterday it went into a good fall. Grasim opens down and it closes above yesterday's close. That shows this guy is super bullish. Till here, Reliance, if I see, has not gone even close to yesterday's close. If I see Infosys way behind yesterday's close. If I see Maruti not even touching to yesterday's close, even after the second bar of green. Now you have Grasim opening and straight conquered. So out of all these 4 stocks, if you tell me, I will focus on only one stock called as Grasim. This guy has shown you in the first 15 minutes, if market turns up, I will be the first guy to give you the best trade output. Now he comes back down again, 1 2 3. If you see over here, the green candle and the 50% comes around this area of the green candle. So this is your DS, daily support. 50% is also kind of confluence with the max put OI. Fantastic. Comes back over here, tries to bounce up. Again comes back. Now see the fun. 1 2 3 red, 1 and 2 red. So the reds are becoming less. The greens are pushing it higher. Then again red, then again green, then again red, then again green. We know that he has already conquered. Some kind of resistance will come in this area. But once he starts pushing it high, no way anyone can stop it. One way streak full on the upside from 590 area to 606. Now we are very clear in this case. What has actually happened is the triangle structure in a much refined way. And in this structure, what has happened is kind of ascending triangle, gap down bullish 50%. You also have the max put OI DS trying to take support, inching higher. Yesterday close has been conquered. Again to red, again up, again reds. Reds are getting out, greens are getting in, and you have a push on the upside. So out of each of them, Reliance, Infi was out of the league, but Reliance and Maruti and Grasim, I will rate Maruti as my C structure. This is your C structure. Open equal to low, strong green candle, conquering yesterday's close. Then you have red candles going up, red candles going up, red candle going up. But here the 3 candle, 2 candle, 1 candle, and the price are rushing on the higher side. Sustaining above 50%. You have DS, you have max put OI, fantastic structure to take in a trade with a very minimal stop loss, like 4 rupees stop loss. And then you straight away get more or less easily 3 times 1:3 risk reward. So this is the key of understanding gap down bullish structure plus conquering yesterday's close plus the clean breakout with ascending triangle. Red candles being eaten out. Let's see Titan, which is also very exciting. Now Titan goes up for the second time, trying to touch to yesterday's close, comes back down. Again, you can see he tries to now go in the second attempt, tries to go higher. Now, if we see all the other stocks and Titan, by 10:30 he is conquering yesterday's close. So he's little late than Grasim, but at least he's conquering yesterday's close. Now he goes back up to DR range, and best part is to see it comes back down. And when it comes back down, these are series of red candles coming back down. Where does he take support? It takes support at yesterday's close zone. And once he starts taking support and inching higher, again, this will be your fantastic trade on the upside. So what is happening? There are two cases of one as Titan, second as Grasim. Titan and Grasim both has shown the willingness to go up, trying to conquer yesterday close, but this guy has gone past very fast. I think I cannot catch. Then he comes back for me, doesn't go below yesterday's close, take a rounding bottom fashion, more red candles, and then you start getting into Grasim and Titan. So idea here is sustaining above yesterday close gives me a very good trade. And again, please understand this was DR, exactly from DR coming back down. We know once this has been taken out, the next stop is at 980, the max pain, and it doesn't breach beyond max pain. So TradeClue helps you apart from your structure. If you have your levels with knowing your stop loss, the trades become easy. So same way, again, trying to see Grasim. He tries to go up, conquers yesterday close, and then we can see he rattles within this zone. But he is now in the last part, if you see, he's trying to conquer yesterday close very easily, and then it starts running higher. So once yesterday close is captured, you can have this kind of entry where you are seeing the good green candle trying to enter where the red candles were there, selling was coming, and now he is able to take it higher. Or you can even go out and take Titan kind of entry, zooming up, let him come back down, do not go below yesterday's close, take a rounding bottom, and then again it pushes it on the higher side. So two kind of clean output from the structures called as gap down bullish structure. Okay, again, 3 important points. open equal to low in each of these cases, strong green candle in each of them, and then the consolidation patch in each of these are above 50%. And now we can say the most important part in each of them is to conquer yesterday close, is to conquer yesterday close, is to conquer yesterday close. So this was exact Grasim, and in the Titan case, it did go up. It comes back down to yesterday's close, takes a U-turn, and then again you can enter. So if it has zoom up in the morning, no problem. It will come back, and then you can get an entry. So idea here is to know the stock is showing strength by gap down bullish structure, 50% mark, open equal to low, strong green candle. But more important, which gap down bullish structure will be fantastic play if it has conquered yesterday's close. So that is the key over here. Not all gap down bullish structures work, but those who conquer yesterday's close, they can fly. That's the basic idea over here. And then you can have these three structures and how to enter, right? So I hope this gives you clarity on combining the breakout for entry and the gap down bullish structure. More importantly, as I said, the levels help you to take more rational decision by keeping proper stop loss. So thank you very much for attending the webinar, and we will keep bringing these kind of webinars future as well.